Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, Head of Investment Strategy. With an objective to empower you with investment insights, on this program we discuss various perspectives that are shaping the global investment landscape. In today's episode, we focus on GCC equities. For the Gulf Cooperation Council at the macro level, growth remains strong with purchasing managers indices still expanding, oil sector remaining stable, non-oil sector thriving, while consumer and businesses remaining confident. External sectors have seen improvement too, with non-oil exports rising firmly. Tourism remains a strong driver thanks to various international events in the region and the visa reforms. Oil production cuts have pushed GCC growth down in 2023. While for most regional economies the oil sector growth has been negative, the non-oil sector registered remarkable growth. Should the production cuts continue into 2024, the growth drag is likely to stay. However, on a year-over-year comparison, we expect oil sector contributions to stabilize. Public finances are strong. However, a simultaneous cut in production and fall in oil prices would put the public finances at risk. On inflation, ad hoc price mechanisms, stronger currencies, composition of the consumer price index basket have all helped inflation stay low through the cycle. On monetary policy, because of the currency pegs to the US dollar, the region imports the interest rate policy from the US. Therefore, in line with the Fed, most regional central banks hiked interest rates to the highest level in a couple of decades. Contained inflation but higher interest rates meant that the real rates in the GCC region are firmly positive. This has not caused a problem for the regional economies as higher public spending countered higher real rates. As a result, investment spending continues to rise across the region and private sector credit growth has been resilient too. Downside risks to growth come in the form of an extended regional conflict, continued oil production cuts in the backdrop of low oil prices, and elevated levels of real interest rates starting to bite the economic activity. Against this macro backdrop, we see GCC equities attractive. Underperformance of GCC equities relative to their global peers during 2023 has been significant. We expect this underperformance to reverse during 2024. In fact, over the last 3 months, GCC equities outperformed their global equity benchmark, and we expect this to continue. Despite the rise in geopolitical risks in the region, oil prices were well behaved and regional equities held up too. For investors, GCC equities present a rare combination of recovering earnings, cheaper valuations, and higher dividend yield. We think high dividend yields are attractive at this point. With close to $6 trillion stationed in money market funds, falling interest rates are likely to prompt this money to find its way into income-generating strategies. Within equities, dividend yielders are likely to prove attractive in this context. GCC as a region stands out with high dividend yielding equities. Within GCC, we prefer Saudi Arabia, UAE, and Kuwait. In Saudi Arabia, we prefer consumer sector equities, while within UAE, we prefer banks and real estate sectors. Thematically, we like infrastructure across the region. Passive investors can also benefit from the transformation of regional equity benchmarks. Currently, just 3 sectors, namely banks, materials, and telecoms, make up circa 80% of MSCI GCC by index weight. However, as more companies from diverse economic sectors continue to list on local stock exchanges, it's likely to be positive over the medium to long term in terms of attracting inflows from global and emerging market investors. Thanks for listening. We hope you found this podcast useful. If you did, please do share this and other episodes with family, friends, and colleagues. For more information on our investment strategies, please reach out to your contact at ADCB. You can also log on to our website at www.adcbam.com. You were listening to the Global Investment Insights podcast from ADCB Asset Management, and my name is Kishore Muktinutalapati.